Welcome to my new video. Today we're going to discuss an important topic, Nidhi companies and their compliances. If you are looking to start a Nidhi company or simply want to understand its regulations, this video is for you. So make sure to watch till the end. What is a Nidhi company? Nidhi, or Mutual Benefit Society, is a type of an NBFC. Nidhi in the Indian context/language means treasure or wealth. It is referred to any mutual benefit society notified by the central union government as a Nidhi company, which are created mainly for cultivating the habit of thrift and savings amongst its members. The companies doing Nidhi business is cultivating the habit of thrift and saving, receiving deposits from and lending to its members only for their mutual benefit are known under different names such as Nidhi, Permanent Fund, Benefit Funds, Mutual Benefit Funds, and Mutual Benefit Company. Nidhis are more popular in South India and are highly localized single-office institutions. They are mutual benefit societies because their dealings are restricted only to the members, and membership is limited to individuals. The principal source of funds is the contribution from its members. The loans are given to the members at relatively reasonable rates for purposes such as house construction or repairs and are generally secured. The deposits mobilized by Nidhis are not much when compared to the organized banking sector. Since Nidhis come under one class of non-banking finance companies, RBI is empowered to issue directions to them in matters relating to their deposit acceptance activities. However, in recognition of the fact that these Nidhis deal with their shareholder members only, RBI has exempted the notified Nidhis from the core provisions of the RBI Act and other directions applicable to NBFCs. As on date, RBI does not have any specified regulatory framework for Nidhis. For more detailed information, visit the official website of vmkprofessionals.vmkpros.com and always review the latest amendments before execution, as laws keep changing frequently. Nidhi Company is a company registered under Companies Act 2013 and notified as a Nidhi company by central government under Section 406 of Companies Act 2013. The central government made Nidhi Rules 2014 for the purpose of carrying out the objectives of Nidhi companies. These rules shall be applicable to every company which had been declared as a Nidhi or Mutual Benefit Society under subsection 1 of Section 620A of the Companies Act 1956, every company functioning on the lines of a Nidhi company or Mutual Benefit Society, but has either not applied for or has applied for and is awaiting notification to be a Nidhi or Mutual Benefit Society under subsection 1 of Section 620A of the Companies Act 1956, and every company incorporated as a Nidhi pursuant to the provisions of Section 406 of the Act. Every company declared as Nidhi or Mutual Benefit Society under subsection 1 of Section 406 of the Act. PTN. If above is not complied by the Nidhi, it shall not be allowed to file Form No. SH7, Notice to Registrar of any alteration of share capital, and Form PA3, Return of Allotment. What are the restrictions prohibition on Nidhi? A. To carry on the business of chit fund, hire purchase finance, leasing finance, insurance or acquisition of securities issued by anybody corporate. B. To issue preference shares, debentures, or any other debt instrument by any name or in any form whatsoever. C. To open any current account with its members. D. To acquire or purchase securities of any other company. E. To control the composition of the board of directors of any other company. F. To carry on any business other than the business of borrowing or lending in its own name. PTN. Nidhi may provide locker facilities on rent to its members, subject to the rental income from such facilities, not exceeding 20% of the gross income of the Nidhi at any point of time during a financial year, while adhering the required provisions as applicable. G. To accept deposits from or lend to any person, other than its members. H. To pledge any of the assets lodged by its members as security. I. To take deposits from or lend money to any body corporate. J. To enter into any partnership arrangement in its borrowing or lending activities. K. To issue or cause to be issued any advertisement in any form for soliciting deposit. L. To pay any brokerage or incentive for mobilizing deposits from members or for deployment of funds or for granting loans. M. To raise loans from banks or financial institutions or any other source for the purpose of advancing loans to members of Nidhi. For more detailed information, visit the official website of VMK Professionals, www.vmkpros.com, and always review the latest amendments before execution, as laws keep changing frequently. Who can be the member of Nidhi? A body, corporate, or trust could not become the member of Nidhi. B. Every NI must ensure that its membership is not reduced to less than 200 members at any time during its operation. C. A minor shall not be admitted as a member of Nidhi. PTN, provided that deposits may be accepted in the name of a minor, if they are made by the natural or legal guardian who is a member of Nidhi. Acceptance of deposits. A Nidhi shall not accept deposits exceeding 20 times of its net owned assets as per last audited financial statements. Acceptance of deposit. Periodicity. Type of deposit. Minimum maximum fixed deposits. 6 months, 60 months. Recurring deposits, 12 months, 60 months. In case of recurring deposits relating to mortgage loans, the maximum period of recurring deposits shall correspond to the repayment period of such loans granted by Nidhi. The maximum balance in a savings deposit account at any given time qualifying for interest shall not exceed 1,000 per time, and the interest shall not exceed 2% above the rate of interest payable to savings bank account by nationalized banks. Interest for fixed and recurring deposits shall be at a rate not exceeding the maximum rate of interest prescribed by the Reserve Bank of India, which the NBFC can pay on their public deposits. Every Nidhi shall have to invest and continue to keep invested in unencumbered term deposits with a scheduled commercial bank or post office deposits in its own name, an amount which shall not be less than 10% of the deposits outstanding at the close of the business on the last working day of the second preceding month. In case of unforeseen commitments, temporary withdrawal may be permitted with the prior approval of the regional director by making application in Form NDH-2 for the purpose of repayment to depositors, subject to such conditions and time limit, which may be specified by the regional director to ensure restoration of the prescribed limit of 10%. A Nidhi shall provide loans only to its members. The loans given to a member shall be subject to the following limits. 1. Rs 2 crores, 2,000. 2. Rs 2 crores but less than Rs 20 crores, 7th oath. 3. More than Rs 20 crores but less than Rs 50 crores, 12th oath. 4. 50 crores, 15. A Nidhi shall give loans to its members only against the following securities, namely, loans to the members shall be given against the securities of gold, silver, and jewelry and immovable property. Repayment period of such loan shall not exceed 1 year in case of gold, silver, and jewelry. In case of immovable property, the loan shall not exceed 50% of the value of the property offered as security, and the period of repayment of such loan shall not exceed 7 years. Loan may be given against the fixed deposit receipts, national savings certificates, and other government securities and insurance policies, provided that such securities duly discharged shall be pledged with Nidhi, and the maturity date of such securities shall not fall beyond the loan period or 1 year, whichever is earlier. Provided further that in the case of loan against fixed deposits, the period of loan shall not exceed the unexpired period of the fixed deposits. For more detailed information, visit the official website of VMK Professionals, www.vmkpros.com, and always review the latest amendments before execution, as laws keep changing frequently. Every Nidhi shall adhere to the prudential norms for revenue recognition and classification of assets in respect of mortgage loans or jewel loans. The rate of interest to be charged on any loan given by a Nidhi shall not exceed 7.5% above the highest rate of interest offered on deposits by Nidhi, and shall be calculated on reducing balance method. The director shall be a member of Nidhi. The director of a Nidhi shall hold office for a term up to 10 consecutive years on the board of Nidhi. The director shall be eligible for reappointment only after the expiration of 2 years of ceasing to be a director. Where the tenure of any director in any case had already been extended by the central government, it shall terminate on expiry of such extended tenure. The person to be appointed as a director shall comply with the requirements of subsection 4 of Section 152 of the Act, and shall not have been disqualified from appointment as provided in Section 164 of the Act. A Nidhi shall not declare dividend exceeding 25% in a financial year. The tenure of individual auditor shall be 1 term of 5 consecutive years. The tenure of auditor firm shall be 2 terms of 5 consecutive years. There should be cooling period of 2 years for subsequent appointment after the expiration of the term of appointment of the auditor. Every year, auditor of the company shall furnish a compliance certificate to the effect that the company has complied with all the provision contained in the rules applicable to the company, and such certificates shall be annexed to the audit report, any non-compliance to be mentioned specifically in the certificate. If Nidhi has earned net profits after tax continuously during the preceding 3 financial years, only then it may open branches. Maximum 3 branches are allowed within the district. The company may open up to 3 branches only within the district. If it proposes to open more than 3 branches within the district or any branch outside the district, it shall obtain prior permission of the regional director by applying in Form NDH-2, and intimation is to be given to the registrar about opening of every branch within 30 days of such opening. No Nidhi shall be allowed to open branch or whatever name called outside the state where its registered office is situated. If financial statement and annual return are not filed with the registrar, a Nidhi shall not close any branch unless it publishes an advertisement, NDH-5, in a newspaper in vernacular language at the place where it carries on business at least 30 days prior to such closure. Fixes a copy of such advertisement or a notice informing such closure of the branch on the notice board of Nidhi, as well as the relevant branch, for a period of at least 30 days from the date on which advertisement was published. It should give intimation to the registrar in NDH-2 within 30 days of such closure. The registrar of companies may call for such information or returns from Nidhi as he deems necessary, and may engage the services of chartered accountants, company secretaries in practice, cost accountants, or any firm thereof from time to time for assisting him in the discharge of his duties. The central government may appoint a special officer to take over the management of Nidhi in case the Nidhi has violated Nidhi Rules 2014 or has failed to function in terms of the Memorandum and Articles of Association. The special officer shall function as per the guidelines given by central government. An opportunity of being heard shall be given to the concerned Nidhi by the central government before appointing any special officer. That's all for this video. I hope you learned something new about Nidhi companies and their compliance requirements. Don't forget to like, share, and subscribe to our channel for more informative content. Hit the bell icon so you never miss an update. See you in the next video.